Hi guys, I will tell you some news about Bitcoin market recently. Recently, China's Financial Stability and Development Commission of the State Council issued a statement about cracking down on Bitcoin mining and trading. In fact, the globalization of the mining industry or the globalization of China's computing power had already begun before the recent policy announcement on the mining industry. According to the current policy environment, it will speed up the process to a large extent. So where can Chinese computing power go? It's obvious that the main direction is North America, the Middle East, and Central Asia. The policy is about to issue and the money situation is bound to change dramatically. In any case, it is an inevitable trend for the Bitcoin computing power transferred abroad. However, nowadays China is still a good place for mining, where there is the most perfect mining supply chain from the mining machine chip development to the power supply, accessories, and all the necessary electronic components. China has the richest clean energy and a large number of the well-trained miners in the world. So I believe the future of the mining market in China is still bright. Since 2011, the bull and bear market of Bitcoin are in a very standard form. Normally, the bull and bear market is very different. When it rises, it will be continuous rising, but there will be a 40% short crash in the middle, and when it falls, it keeps falling. Every 4-year halving cycle corresponds to a big bull and bear cycle. Especially in 2017, this trend perfectly reproduced the bull market trend in the second half of 2013, allowing a large number of people who do historical data analysis to make a lot of money. This is also the fundamental source of the moving average 120-day or 200-day bull-bear boundary theory. The special bull market of this round, compared with the previous bull-bear market cycle, this round of bull market is somewhat special, although the fundamental law of starting a violent bull market after halving remains unchanged. But the first point, according to the 4-year cycle theory, the bear market in 2018 is very similar to the bear market in 2014. Even the distance from the lowest point to the halving days is almost the same, 543 days versus 507 days. Then, 2019 should be very similar to 2050, with the bottom sideways for 1 year. But in fact, from April to June in 2019, there was a small bull market that rose 3.4 times in 3 months. On March 12, 2020, there was a 312 crash that had never occurred in history. It fell by 63% in 1 month and fell sharply below moving average for 120 days and 200 days, especially from March 12 to 13th, it fell by 52% within 24 hours. According to the historical law, a 63 drop is indeed a bear market, but it is not. In less than 2 months, it rose back to $10,074 on May 7th. After the start of 2021 halving bull market, according to the law of 2013 and 2017, there should be multiple 40% decline when it rises. But in fact, there are only multiple 20% decline, and the maximum drop is only 30%. To explain this strange phenomenon, the small-scale bull market in 2019 can be explained as a result of the Plus token, and the March 12, 2021 can be explained as a series of high-leverage liquidation caused by the development of financial derivatives. No decline in the 10,000 to 65,000 stage can be explained as institutional investors such as Grayscale and Tesla bought heavily. But in short, so many peculiarities show that we are in a special bull market and there is no longer a clear distinction. In the final stage of the bull market, it was frenzied. The participants ran out of funds and leverage, and the currency price rose sharply in a short period of time. However, the speed of newcomers and new funds entering the market cannot keep up with the short-term skyrocket of the currency price, which makes the currency price insufficiently funded, crash from a height with a lot of potential energy, and the bull market is over. Then I will tell you a concept, 60 days cumulative increase indicator. The process I mentioned below described in mathematical language is 60-day cumulative increase is too high. 6-day cumulative gain equals add up the gains of the past 60 days. In the bulk test of historical data, the 60-day cumulative gain indicator shows perfectly consistent. The first point is the hottest market sentiment equals the highest point of the currency price equals the highest point of the 60-day cumulative increase. The second point is the top K line is pointed, not flat, because the market sentiment only lasts for a short period of time when the market is most frenetic. This also makes a large number of experienced investors feel that the bull market is not over yet. How can the bull market be over if the market hasn't been over-frenetic? Compared with historical experience, the laws of mathematics are more reliable, so we are still in a long bull market and it's likely to be in a round of decline like March 12, 2021. 3 months later, the price in July 2021 exceeded the previous highest price. The worst case is the short bear market in the double peak bull market like 2013. 7 months later, the price in November 2021 rose more than the previous highest price. Why won't us face a long bear market? Because there has not been a wave of extreme enthusiasm before squeezing out funds. If Chinese government crackdown on trading and mining is not severe in the future, $30,000 may already be the lowest point. Similar to 312, the instantaneous oversold low point caused by a series of liquidations. But if the crackdown is severe, the lowest point may be at $25,000, a 63% drop according to the 312 convention. All in all, the short-term Bitcoin price is unpredictable, but the bull market is still there. That's all for today's video. I will see you next time.